Assalamu alaikum friends, welcome to SBR revision series for September 2021, and we are going to cover a very important standard IS 36, which is impairment of assets. This standard can come in any question 1, 2, 3, 4, right? And impairment is a very frequently tested standard, so you better know it. All the format, the formula to calculate impairment, the indicators of impairment. So the topics that we are going to cover: the definition of impairment loss, calculation of recoverable amount. How do you calculate the recoverable amount? Okay, there are two methods and you have to take the higher of the two. One is fair value less cost to sell, the other one is value in use, the higher of these two. Okay, indicators of impairment, there are two types of indicator, one is internal, one external, and finally the cash generating unit. So let's start with the impairment loss. What is impairment loss? Impairment loss is simply when your carrying amount of an asset or a liability is more than the recoverable amount, then it's an impairment loss. What is recoverable amount? Recoverable amount means any amount that you will be getting when you're selling an asset or settling your liability. The amount that you will be receiving, okay, is less than your carrying amount of an asset or liability. That means there has an impairment loss. How do you calculate this impairment? Compare the carrying amount of an asset with the recoverable amount. Mostly impairment losses are given from the point of asset. Okay, it could be any asset, impairment as non-current asset, tangible asset, intangible asset. Okay, and mind another thing, impairment loss also comes for your financial asset also under IFRS 9, which we are going to cover. So impairment comes in almost any asset it can come for. But the basic standard that you have to know about impairment loss, how do you calculate that loss, which is under IS 36. For example, compare the carrying amount with the recoverable amount. If your carrying amount is more than recoverable amount, asset has been impaired. That's the way of testing whether it is impaired or not. Always in the question you have to check, because not every time it will be impaired. Sometimes your carrying amount will be less than your recoverable amount. That means there has been no impairment. Okay, impairment loss. Now, to find the impairment loss, compare two things: carrying amount with recoverable amount. And recoverable amount, you have to choose the greater of these two things: fair value less cost to sell and value in use. Fair value less cost to sell, how do you find out? Selling price minus selling cost. Value in use, present value of the future cash flow. Okay, that means you are not selling the asset, you are holding the asset. What is the benefit of it? What is the present value of future cash flow from holding that asset or using that asset? That is known as value in use. So whichever this two is greater, that is known as recoverable amount. You have to take it as a recoverable amount and deduct it from your carrying amount, and that's how you find the impairment loss. And remember, your impairment loss can never be negative. Okay, can never fall below zero. So indicators of impairment, there are two sets. Okay, and whenever there are indicators of impairment, you have to annually do impairment review. Okay, so the internal indicators are what? Physical damage to the asset, or management is committed to reorganization of the business, idle or obsolete asset, or operating losses in the business where the assets are used. So these are some internal, these are in the control of the management inside the organization. For example, if the asset is lying idle, managers can take some actions to make it into use, right? So these are internal indicators. External indicators are those which are not in the control of the management. They are outside the control of the company. They're external to the company, such as competitor actions. Competitor have done something through which your asset become less attractive. Or increasing interest rate, because if interest rate increases, it will reduce your value in use. How? What is the connection between interest rate and value in use? See, value in use, what is it? Present value of future cash flow. So if your interest rate increases, what happens? That means your discounting rate, that interest rate, that discounting rate increases. Interest rate increases means discount rate increases. So discount rate increases means what? Future cash flow reduces. Present value of future cash flow will reduce. So that means your value in use will reduce. It will be less. Okay. Market value of assets falling. Yes. Normally the value of the market of the asset is falling. So You don't have to apply all this or list all these indicators, but depends on the scenario that is given to you. In the scenario, what type of indicator is it? Is it an internal indicator? Is it an external indicator? Okay. And out of the list, which one is it? Is it an indicator or not? First of all, that also you have to identify. Next, we are moving towards cash generating unit. What is cash generating unit? Cash generating unit occurs when the individual asset may not generate a independent cash flow. That means you are not able to say that impairment is from this asset. You're not able to tell that. That time you are pulling all the assets together, and this is known as cash generating unit. And now you are calculating impairment on that CGU. Okay, it is the smallest group of assets that generates independent cash inflows. Okay, so whenever cash generating unit is there, okay, mostly you have to know how do you allocate the impairment losses, because impairment losses now you cannot say okay it is for this asset, it is for that asset. No, cash generating unit includes all the types of assets, group of assets. No, so how do you allocate this impairment losses against the different assets? This is the order that you have to know. This is the following order. This is only for cash generating unit. If specifically they have told that for this asset this is the impairment, it's easy. Then cash generating unit will not come for that asset. Okay. So number one, goodwill. Whenever impairment loss is given to you and a cash generating unit, that is a group of assets, is also given to you, first allocate that impairment loss against the goodwill. That means let's say your impairment loss is 5 million. Okay, forget about 5 million. Impairment loss is 5,000. Goodwill is 10,000. Sorry, goodwill is let's say 2,000. So out of the 5,000 of impairment loss, 2,000 will go for goodwill entirely. That means you are left with what? 3,000 more. That means impairment loss is now 3,000. 2,000 already went for goodwill. Goodwill is now out. What is remaining is 3,000. So this 3,000 now you have to allocate on a CGU in this way. Remaining assets in proportion to the carrying amount, not the whole amount. How do you allocate among the other assets? In relation to their proportion on the carrying amount. Goodwill entirely you can take up to the amount of the goodwill. You cannot take 5 million loss for goodwill because goodwill itself is 2 million only. Sorry, 2,000. And another area which students often forget is that no asset can be written down below the higher of these three things: fair value less cost to sell, value in use, and zero. Whichever is the higher out of these three. Maximum only up to that much only you can reduce the amount of your asset. More than that, you cannot write down your asset. In short, what is it trying to say you? That your asset cannot become negative. It cannot fall below zero. Max it can fall as zero, up to zero. Below that it cannot fall because zero is the minimum value, no? Because they told higher of this two: fair value less cost to sell, value in use, and zero. So fair value less cost to sell and value in use cannot be negative, and zero. So that means zero is the minimum, the maximum it can fall. That means it will never be negative. Okay. Next, recognition of impairment loss. How do you recognize this impairment loss? So this impairment loss, if it depends, your it depends on the asset. Are you holding your asset at cost or at fair value? If you are holding your asset at cost, that means you are calculating your asset, measuring your asset at cost. Then the impairment will be charged in the profit and loss. If your asset is held at a revalued amount, fair value model, then impairment will charge to other comprehensive income. Okay, but only to reverse any previous surplus on that asset with any excess charge to profit and loss. What does it mean? That means only up to the amount that previous, see, because of that revaluation of asset, where does revaluation gain goes? Revaluation gain normally goes under other comprehensive income, no? We are now talking about IS 16. Please remember the rule of IS 16 when we are talking about revalued assets. Okay, you should be able to link the standard also. Among different standards, you should be able to do this. This is a very good skill if you are able to do it, which will make you remember things better and understand and link. There is always link among the different standards that you're studying. Nothing is an isolation, okay? That's why we are talking about IS 16 here, because we are talking about revalued asset. So IS 16, when you're revaluing, revaluation gain goes in other comprehensive income. So impairment loss also will go under other comprehensive income, but only to the amount of that gain. For example, let me explain this with numbers, okay? Your revaluation gain before, which was recorded under other comprehensive income, was 5, 5 million. Now you are having an impairment loss of 2 million. Okay, so now only you can recognize that 2 million of impairment loss under other comprehensive income, which will bring down your previous revaluation gain to 3 million. Okay, nothing will go on your profit and loss. Sorry, I'm sorry, impairment loss will be more, okay, because excess will go to, okay, I'm sorry. Impairment losses 5 million and revalued gain is 2 million. So that means that impairment loss out of 5 million, 2 million will go to other comprehensive income. That means now there will be no gain, which will be remaining in your evaluation. In your other comprehensive income, it will be zero now. So out of 5 million, 2 million went under other comprehensive income because there was a gain, and the remaining 3 million will be taken to profit and loss account. You're understanding the scenario now, the impairment loss. Okay. Definitely, again, I will advise you, don't read, and memorize standards in SBR. SBR, do more questions and understand. The more questions you do, the more confident you will be, and you will actually know which areas are tested very frequently. This is the way I have to do when it's for revalued asset. This is the way I have to do when it's for cost. Okay, so do questions. There are questions, enough questions on this area, on this topic. Okay, you will find out in your group accounting itself. You will find these questions in your revision gate and past paper. So that's it for impairment. Next standard is IS 37. Again, a very important standard, because if you ask me the percentage of this coming for your exam, I would say 100%. There's no doubt about it that IS 37 you're going to get somewhere in your question. Sometimes I have seen a past paper, I don't remember the past paper. Twice it came. In two different questions it came, IS 37. But relating to different things. Because IS 37 is a wide topic, right? So, which is provisions and other things. So till then, thanks for watching and see you in IS 37.